All right, Paul, we're live. We're gonna turn the audience on. We have participants filtering in.
Sounds great.
Okay, it looks like the presenter. All right, that should do the trick right there. Okay, we have a participant view and we are good. Folks here on the East Coast, it's Anthony Mento here with my friend Paul Sargent. Good afternoon. To the rest of the country, good morning, and thank you for tuning in. We have a fairly action-packed session here. We'll have you finished in about 45 minutes. Timing is right. Life insurance in the business marketplace, Q2 2023. Paul Sargent is a CLU, CHFC, CLF, sales vice president of the business solutions department of Principal, who is the foremost authority in the life insurance industry on business continuation, business strategies. Paul will do a lot of the talking here and share some of his technical expertise and present ideas to utilize the current climate on how to sell some life insurance in the business space. So, I'd like to start by just kind of talking to you about the prospect profile. I think the big misconception is that business planning and business continuation planning is needed for large companies, right? Like hundreds upon thousands of employees, particularly when it comes to non-qualified benefits. But I think what you'll see here is a demographic that Paul will explain that really caters to a select few industries, right, that really stand out, most of which are small business owners, right, about the size of a life brokerage, right, like 24 or fewer employees. And about half are corporations, so you can still do planning for LLCs and sole proprietors and other types of entities. So, Paul, would you mind just introducing yourself for a moment, talk about your role at Principal, and then really get into the experience Principal has in this business space, about how many plans you've touched, what kind of match rates you're looking at, and the categories of the types of business owners that you're working most closely with.
You bet, Anthony. And thanks for having me on this morning. For me, this afternoon, for the folks on the East Coast. As Anthony mentioned, I'm Paul Sargent. I'm with Principal Financial Group. My role, my responsibility is working with, the life brokerage team and other advisors all across the country, really being an additional resource in the business insurance marketplace. Whether it's a core focus of your practice, whether it's something you're looking at expanding your practice into, our team is really here to help educate on what are some of the common concerns and needs amongst business owners, what are some of the insurance planning techniques that are available to you, and then obviously kind of where Principal fits in that marketplace from a sales support, concept support. An issue where my team, we do a lot of work is really in the point of sale support work as well. So helping you as an advisor get in front of your clients and share some of these ideas at a more consistent, local, and specific level to your customers as well. So the slide that we have up here in front really talks about Principal's expertise in this marketplace. We talk about the kind of customer profiles that we'll dig a little bit deeper into with our concept conversation today. But at Principal, we've been doing this for a very long time. It's the core of our business. It's really all that we do here at Principal is business insurance planning. We have over 26,000 business insurance plans on our books. And what you're seeing here on this slide is really a high-level breakdown of what our customer base looks like. And the reason why we bring this up is really to give you an idea of who are the good targets, who are the good fits for a lot of these ideas that we'll share throughout our time together this morning. It's really kind of to help you focus in on the right industries, demographics. And to Anthony's point, really, it's an underserved market because a lot of these larger corporations may have done some non-qualified planning at a very high level, but oftentimes the small to medium-sized business owner gets overlooked because A lot of them, don't realize a lot of these plans exist. The advisors they're working with may not have brought this to their attention. So there's a lot of untapped opportunity within the marketplace that we'll cover through today. So as we're going through some of these ideas today, we'll talk specifically about the right kind of client profiles to be looking for. We'll talk about some key language that I've seen other advisors successfully use to kind of open these doors. We'll talk about some of the concepts that generate revenue from an insurance planning perspective. And then certainly how Anthony's team, my team, can be an additional point of resource to help you navigate through some of these opportunities in the business insurance market.
So Paul, let me just reiterate one thing. You will help a licensed agent size up the prospect, identify the opportunities, assist either virtually or in person at point of sale, and walk the advisor through every step of the way, on top of the business market administration that principal will handle for the consumer.
Correct. Yeah, we are here every step of the way. I mean, we understand that the business insurance marketplace is not something that every advisor is, fully engaged in. This is all that we do. So we want to make sure that we are, again, an extension of the team with Life Brokerage and obviously with every advisor here on the call. So we are here every step of the way.
Yeah, thank you, Paul. I just, and the cost to the producer, Paul, just to level set expectations.
My split is very fair. It's zero.
All right.
So I'm pretty good with that.
Thanks, Paul. Thank you. So just, having a very strategic relationship with principal, I was able to do some digging, and, I asked some, pretty direct questions like, why do you do this? Right? Why do you put so many resources into this space and do all of this service work, from buy-sell reviews to administration to business valuations? And the answer is fairly simple, right? Principal will write a product 1 out of every 3 times. And the average case size is $24,000 per deal. So, this is really sticky business. It gives principal visibility in other product lines like 401k, like disability, right? Like executive comp, like life insurance, like annuities. So it really, once you enter this principal ecosystem, it's kind of like Apple, right? Once you own the iPhone, you can never get out. So, strategically, this is a big push for principal, and quite frankly, they're very, very good at it. So, and that's why, Paul is with us here today, and our number one, core partner. Paul, as we get into, let me just take a step back. Before we get into the competitive nature of today's workplace, what are some of the top industries that you serve that the participants on the call should have their eyes and ears open and looking for?
Yeah, and I think there's a couple of different kind of subsets, specifically with our conversation today, really around the executive benefits space. And we'll talk a little bit about the succession planning space as well. But, we look at, obviously, there's been a lot of, chaos, whether it's in the markets, whether it's with interest rates, but there's been a lot of industries that have seen pretty consistent, whether it's growth, whether it's just volume, whether it's revenue. So kind of areas of emphasis where we've seen the most opportunity, specifically around the executive benefit space. We see a significant amount really in the white collar space. So think about your law firms, your CPA firms who are anxious to attract young talent, retain young talent. It's a very competitive industry to keep those young attorneys and CPAs as a part of the practice. So the ideas that we'll talk about today are how do we maybe create some paths to partnership without equity. We'll talk about ownership without control. So those industries tend to be really good fits. Engineering, architecture firms, again, anywhere where you've got very specialized employees that are hard to find replacements for because of their skill sets, their licensing. Those are obviously industries that are very, core to this kind of business as well. One of the industries that we've seen a significant amount of growth really over the past 2 years has been in the medical field, whether it's hospital groups, physician practices. There's been a significant amount of consolidation inside of that marketplace. And as a direct result, we see a lot of physicians moving out of private practice who are now joining, whether it's larger hospital groups, larger practices, and they're now having an employer-employee relationship. The need for non-qualified planning, key employee retention planning is very keen inside of those organizations. So we've seen a very significant uptick in that medical professional space, as well as we talk through some of these ideas. And probably there's the two other ones that construction, whether it's residential or commercial, even despite rising interest rates, we still see that as a very vibrant, growing industry. And as a direct result, it's still very competitive. So we'll talk a little bit here about kind of the labor turnover rate, but a lot of these industries are still seeing high turnover rate of key employees. And then probably the last one is more broad-based, is family-owned businesses. And that's going to fall in that small to medium-sized business demographic. I know that's not very specific to the type of industry, but what we tend to find with family-owned businesses is oftentimes they're going to have non-family member key employees involved inside of that business. The conversation around key employee retention planning, non-ownership type of planning that can really tie that non-family member to the business is something that's very interesting to present to those business owners, something they don't hear very often, and definitely gives you a unique perspective to go out. So again, think about those white collar organizations, your law firms, CPA firms, engineering, architecture, medical practices, construction, and then family-owned businesses. Those will be the core industries where we are having the most success in placing the most revenue generating business really over the past couple of years.
Yeah, thank you, Paul. And if anyone on this webinar attended FinSecca this week, you heard a lot about loan regime split dollar, particularly in the healthcare industry. Right, that was a main stage session and a breakout session, and it was a lot of conversation around the conference on that subject matter. So, all right, just because I am a third-party data research nerd, I look forward to this report being released by the Bureau of Labor Statistics. Back in 2010, I met one of Paul's associates, a gentleman named Tom Bates, and I said, Tom, how do you sell so much key person life insurance? And he said, JOLTS. And I said, I don't know what that means. So he pointed me to the jobs openings and labor turnover report published by the Bureau of Labor Statistics. Paul, give us some color. What does this mean? How does it impact key person planning? And how does it motivate employers to hang on to their good people and to actually execute on some planning ideas?
Yeah, so we're from the same ilk. I mean, I actually have this website linked saved as a favorite because they update it every month. So the nerd goes back and forth here too on this data, Anthony. So what this really tells us is the Department of Labor measures a lot of different things, but one of the key things that they do measure is the voluntary turnover within these various industries. So what the JOLTS report actually tells us is how many people per month are leaving their job to go somewhere else, not because they retired, not because they went on disability, not because they died, but because they actually quit and went somewhere else. So you'll hear JOLTS, you may also hear this called a quits rate. What this has told us really over the past 6 or 7 years is that the number of people voluntarily leaving to go somewhere else every year seems to be at an all-time high. It kind of tapered off a little bit last year, but it's still at record levels. And what this tells business owners is that based on specific industries, a lot of which we've already kind of talked about as those client profiles, they're seeing record numbers of employees leave every single month to go somewhere else. So the pain point to a business owner is saying, it's not, when we talk about key person insurance, we as insurance producers always talk about, what happens if your key employee dies? They get in a car accident, they're hit by a bus, they fall out of a hot air balloon. Pick your way to kill off your key employees. That's how we sell key person life insurance. In reality, this story right here is what's more of a concern to the business owners. What happens if one of your key employees walks in tomorrow and hands you a resignation letter? And that's what this report is telling us, is that those individuals who are walking in and handing that resignation letter are consistently at all-time highs. What can you as a business owner be doing to create specific benefits for those key employees, to create retention strategies, to create reward strategies? And a lot of that's going to come into how we utilize non-qualified solutions to help those business owners address this specific need.
Well said. Well said. And we'll dig in here a little further, Paul, as you'll continue to expand on this war for talent, right, and the need to strengthen the benefits. Give us a little color on this slide here. and
Yeah, so
prioritization.
it really just enhances a lot of the conversation we had on the jolts and quits rate. We at Principal do a survey every single year. We survey hundreds of business owners, and really for the past decade, the number one concern that we hear from business owners is, I'm worried about business protection strategies. Primarily, it's around key employees. We talk about unemployment rates, but really what we want to focus in on is the key employees. And we always kind of joke the unemployment rate for a key employee is always 0%, because if they're really good at what they do, they're going to be, sought after, they're going to find opportunities. So really what this does, it reinforces that conversation around, as a business owner, you're not alone in understanding that the need to retain and reward for key employees is a paramount need that all your business owner counterparts are seeing across the country. So we'll certainly talk more about kind of the strategies that go with that. But our survey really talks that is a core tenet. And then obviously we dig into more business planning discussions that we'll cover here around succession planning, disability income pieces of that as well. But what this basically validates is, what the JOLTS report is telling us, we're hearing directly from business owners as well.
Yeah. Yeah. Thank you, Paul. So the title of this particular session is called, Life Insurance in the Business Marketplace, Q2, 2023. Paul, where can we benefit, or where can the participants on the call benefit from the timing? And being that we are in the middle to tail end of March and beginning of April, where are the hot off the press opportunities right now from a timing perspective?
Yeah, I feel like, Anthony, we were together in January. That felt like 2 days ago, and it was 2 months ago. So time certainly is flying by. But, as I look at the timing wise of why this is a relevant conversation, number one, a lot of business owners are kind of consolidating 2022 still. They're working with their CPAs, they're working on their tax returns for 2022. And inside of that, they're really looking at inflows and outflows of income and cash. And a big part of that's going to be looking at, what are we doing as payroll, our key employees, bonuses. So a lot of these business owners are coming fresh off of year-end bonuses. A lot of times they're looking at, what their expenditures were for how they were paying their employees last year. Are they seeing a perceived value? We're also finding, for a lot of advisors who have 401k clients, that right now is the planning process. They've got a lot of maybe participants who might be getting refunds out of the 401k because the plan was failing testing. Maybe they're pivoting to a safe harbor plan. All those things right now, as they're bubbling to the surface, tend to open up good times to have a conversation around non-qualified planning. And then, obviously, as those business owners are doing those returns, as they're consolidating their 2022 year end, it's a good time to be thinking about not just the non-qualified side of things, but also around business continuation. How has the value of their business been impacted by their year in 2022? Is there a need for us to go in and look at updating buy-sell coverage based on new business valuation? There's a lot of things right now that are just really tied to that tax time that a lot of business owners are really going to be keen to. And what you're end up finding out is that also a lot of business owners are seeing how much they owe in taxes. They're going to be looking for ways to maybe either mitigate taxes or look at sheltering future income dollars. Again, leading to a lot of potential non-qualified life insurance conversations with the owners themselves directly. So timing right now is actually really good as owners are kind of getting their 2022 year end buttoned up.
Thanks, Paul. Okay. So as we look to open doors and uncover non-qualified planning opportunities with business owners, take us through, right? How to identify who I want to talk to. How do we validate the need for a program like this? And then how do we differentiate from every other life insurance agent or BGA that pitches key person, key retention, quote unquote, golden handcuffs? What are you doing differently, Paul?
Yeah, so I think it goes back to that conversation about key person death benefit planning versus key person retention planning. So I think, there's, pick your, you'll find that you're going to have a lot of insurance producers will go in and they understand key person insurance, and they'll say, hey, you got a key employee here. If they die tomorrow, you need to make up for lost revenue. You need to find the replacement. And key person planning is a fundamental, solid business insurance technique that needs to be a part of this discussion. However, when we start thinking about where the really non-qualified retention strategies are built, it's not about, that death benefit solution. It's really about helping the owner understand what's the most common thing to have happen. Again, that's about your key employee getting that phone call from the competitor and going somewhere else. So one of the best lines, I've already said it once, but that I've heard from an advisor was, ask your business owner clients, who is the last person you want to have walk into your office tomorrow and hand you a resignation letter? And all of a sudden they can say, gosh, I've got these two individuals that are my number one or number two sales folks. They manage my operations. They're really the ones who, if they left tomorrow, I'm in a big bind. And that could be their office staff, that could be salespeople, it could be, relationship management, whatever it may be. They're going to know who those individuals are. And then the conversation pivots to, well, what can we do to help make sure that doesn't happen? Again, validate that they're not alone. The number one concern we hear from our business owner clients is protecting against the loss of a key employee. And that, again, could be to a competitor, to a unfortunate, circumstance around death or disability. We can help you plan for that. And then how do you really separate yourself? Again, a lot of these business owners do not know that these kind of plans exist. They know if I've got a 401k, if I have group benefits, those are non-discriminatory plans that everybody has to get the same deal. Everything that we're going to talk about in our conversation today around executive benefits is, how do we select out a group of individuals above and beyond the K plan, above and beyond the qualified plan, that we can really do something specifically and exclusively for. And so a lot of business owners don't know that you can do that. So what we're going to talk about is, how can we put plans in place, provide solutions that have your employees think like an owner, act like an owner, but allow you to maintain control of your business. And all that's done through executive benefits. The last one here was a large construction company in central Iowa, where we had a panel discussion. He talked about, hey, we provide asymmetrical benefits for our asymmetrical contributors. They talk about, we actually have specific benefits geared towards our key people that are only available to those key people. And again, a lot of business owners don't know that we can do that. So if you can add some of this language to your initial discussions, what we can then do as a follow-up is bring Anthony, his team in, really as a part of that discovery conversation once you have a business owner who wants to learn more about these types of solutions.
Awesome. All right, Paul, this is where we're getting the most traction, right? There is a problem as wages continue to increase for highly compensated, or the key people per se. There is a phenomenon that we need to address to restore benefits. There is, let's almost say, a reverse discrimination against the highly compensated, right? The base level benefit that we provide in the workplace represents a very, very, very small fraction of either the income that needs to be replaced or the disability, right, qualifying event of a highly compensated employee versus the rank and file employee. Disability group DI may represent 60% of income to a rank and file employee. It may represent 6% of replacement income to a highly compensated executive. So explain to us how you're using the Principal platform to, quote unquote, restore the benefit to our highly compensated individuals, in doing so on a friendly enrollment and friendly underwriting basis.
Yeah, so, and from a high level, I think kind of looking at qualified plans and group benefits, as we'll kind of core in on those two things. Those two things are really designed as a rank and file benefit. There are limits on 401k plans, limits inside of group benefits. Those are really designed to benefit the rank and file employees. So Anthony, to your point, the more money you make, the less impact a lot of these plans have. So as you can see on this particular page, we're talking specifically about the retirement piece. The more money you make, the less of an impact the 401k has, less of an impact Social Security has. So how do you, as an advisor, help business owners help their employees bridge that gap? And that's where that non-qualified discussion comes in. So if we jump to the next slide real quick, it'll kind of talk about how we have this discussion. So really, when we start to see that an owner has, hey, I've got a couple of key employees that I'm really concerned around them leaving, I want to provide ancillary benefits, we understand that there's a gap for us to build in there. What we're going to go in and do is, again, very consultative. We're trying to do discovery, really, where we're trying to uncover what the overall goal and objective is. And ultimately, it's going to help us determine, hey, we have a need for a non-qualified plan. But non-qualified plans, there's no one size fits all. There's a lot of different options, whether, Anthony's mentioned loan split dollar, true deferred comp, bonus plans. Don't feel like you need to be an expert in any of these things. What I want everyone on the call today to be, get really comfortable with doing is having that initial discussion and then being able to ask a few questions. So as we start to say, hey, we have a client who's got a need for a couple of key employees to be in a plan. What are the key questions that we want you to be able to ask to start that initial discovery? And then we'll obviously come in and help, fill in any gaps. So the first thing we always want to know is, what's the corporate tax structure of the business? Are they a C Corp, S Corp, LLC? That will matter as we kind of look at the different plan designs that are going to make the most sense for that particular business. As we're talking about these executive benefit plans, is it for the owner? Is it for key employees? Is it for both? It's pretty common for us to start the conversation on, hey, the owner's actually looking at doing something for himself or herself, and now it's, I got other employees. Or we say, hey, here's what we can do for your key employees. And the owner says, gosh, that sounds pretty good. Can I be a part of that plan? Depending on question number one, the answer is yes or no. We'll be able to design plans that may include the owners, may have a separate plan for the owners. Either way, we're here every step of the way to figure out the right plan. And then the last question is, when we're talking about those plans for employees. So specifically, we've got these 2, 3, 4 key employees that we're trying to uncover that we want to put a plan in place. From the owner's perspective, what is more important to them with this plan? Is it getting a current tax deduction today? Or is it maintaining control of the plan assets and getting my tax deduction down the road? And all that's telling us is, what's the bigger priority for the business? Is it retention, maintaining control, or is it through a reward structure like an executive bonus plan? So we can spend more time on that, certainly, as we kind of look at what various plan designs look through those two different concerns. But ultimately, depending on if it's a control issue or if it's a tax deduction issue, that will direct us on what kind of plan design is going to make the most sense for that business owner.
That's right, Paul. And I can tell you about a half dozen times a week, an advisor calls in, hey, I have a business owner who wants to do deferred comp for his employee.
Yeah.
And, that is a world that is enormous, right? And a lot of times, although the request is well intentioned, it's not at exactly what that particular business owner is looking for. Yeah. So these simple 3 questions help steer us in the right direction into the right program that meets the needs and goals and objectives of the business owner. So we have a 1-page Life Brokerage business planning fact finder that we typically grab from an advisor to help narrow down. But these 3 questions are going to be like first and foremost at the top of that questionnaire. And then we can drill down and customize a program, to your liking. One subject I did want to touch on, Paul, because it's been a really big market for us and very attractive to a lot of business owners. There are a lot of business owners who just aren't ready to fill that gap, per se, with these huge cash value life insurance policies, right? Sometimes they're looking to just provide a benefit equal to the rank and file. But it's messy, there's underwriting, examiner has to come see their key person, grab 3 vials of blood, pee in a cup, ask them if they hang glide, scuba dive, all these crazy questions. Principal has finally delivered a solution that helps fill that gap in a streamlined electronic process. And Paul, I think we'd be remiss not to talk about that, at least and share a case study or two on how you're using guaranteed issue term to solve some of the restoration of benefit requests we get from business owners.
Yeah, and if we jump ahead one, I think kind of going back to the same conversation on the 401k side, as we talk about the rank and file employees, where group benefits are really designed to benefit those rank and file employees. So let's say you have, and again, there's probably a lot of folks here who are not, group benefits experts. That's okay, neither am I. But as we start talking to a lot of the benefits producers, it's very common when we have a group life plan, so paid for by the employer, an ERISA plan. You're typically not going to see a lot of businesses with a benefit above 50,000. There's a lot of reasons. We only go into Section 79, but the bottom line is those kind of plans are designed for the rank and file. So if you have if you have an employee making $50,000 a year, hey, that's great. That life insurance provides 100% salary replacement if something happens. But in this circumstance here, if you've got the CEO making 350 grand, that same $50,000 employer paid benefit is only 14%. So again, with the goal of benefits trying to treat everybody equally, to Anthony's point earlier, are we actually treating those key employees the same way we are the rank and file? And the answer is really no. So what can we do to maybe equalize, restore that benefit for those key employees? And if we jump ahead to the next one, we'll talk about how we really do that. So as Anthony mentioned, we have a guaranteed issue. So it's a non-underwritten guaranteed issue term product that can be paid for by the business. It can be owned by the employee. So it is an executive benefit where we can enhance that coverage, whether it's simply to restore 100% of benefit, provide additional benefits above and beyond what's provided in the plan, do a multiplier of salary. There's a lot of different ways that we can design this plan. Again, the idea being is that business owners are starving for ways to enhance benefits for their key people. And to do this on an exclusive basis where you're carving out this executive white collar management level folks, to have a guaranteed issue product that's paid for by the business that they own, that can name their own beneficiary, that is a standalone term insurance policy, is a very unique story to tell that most business owners have not heard, because the market has been very small for this, because very few carriers are actually doing this kind of work.
And Paul, I think it's important to share with the group, this is not a heavily loaded, guaranteed issue group term policy. These are individually owned insurance policies, either in duration of 10 or 20 years, preferred in standard rate class. So what that means in the GI world is that it's somewhere around an average mortality to a slightly increase over average mortality. Convertible, portable for 5 years, convertible for 5, portable for as long as the term exists. So this is a real deal term policy. Paul, talk about group eligibility and how you can qualify for something like this.
Yeah, so this obviously, this is not designed for the rank and file. So I think if we jump ahead one, we'll kind of go through the definitions here. So we are looking at employer-employee relationships. So no 1099 employees. Really, we're looking at executive mortality. So think your management, executive, white collar, actively at work, making at least $75,000 a year or more of income. And then the average age of the group, we're looking at 55 or less. So, we will issue up to age 70, but we are looking at that average age of the group being 55 or less. And we can go down to 10 lives on these groups. So we can also engage with a business who maybe only has 10 or 15 key employees, 10 or 15 owners that they want to have as a part of this plan. I will tell you our average is somewhere between 35 and 40 employees inside these plans, but we work on a lot of opportunities that are in that 10 to 20 range as well. So you have the ability to go down to a smaller number of lives. And we also have opportunities we're working on that are in the hundreds of lives as well. We have one that's 950 lives right now that we are actively working on as well. So this is an opportunity that exists because, quite frankly, these products really haven't existed in the marketplace, save for a few options that have been available for the past few years.
Yeah. Thanks, Paul. We'll get into the amounts probably offline. We want to get to the meat and potatoes of the case studies and get into the BOS strategy. So as I mentioned, right, new enhanced implementation process. So there's a master app, all electronically enrolled, individually owned policy. So it's pretty cool.
Yeah, long story short, we make it easy. I'll put it that way. So
that's fair. Paul, as we transition away from the restoration of benefits and talk a little bit more about the business owner and business market administration and the business owner and executive solutions group and your team. Tell us a little bit about who's behind this, right? Who's behind the curtain? Who's supporting you and your folks, and kind of what can the participants expect when engaging with Principal?
Yeah, whether it's on the non-qualified side, the executive benefit side, the buy-sell side. I mean, our focus, as we mentioned earlier, is really from start to finish, from before, during, and after the sale. We got a dedicated team. So on the front side, obviously, our team works very closely with Anthony and his team. The point of sale work that we do, we've got a lot of expertise that we bring to the table there. In addition to that, we have CPAs and attorneys on our staff. So we're doing a lot of these advanced planning conversations where we have to worry about tax and legal stuff going on. We have a dedicated team that does that. What's unique about Principal as well is our attorneys and CPAs are available for you to actually utilize in a conversation with the client as well. So let's say you're doing a buy-sell agreement or you're doing a review utilizing our buy-sell review platform. Our attorneys will actually jump on the phone with you and your client, maybe the client's attorney or CPA. And that is a little bit unique because we're not going to charge a fee for that service. Just want to provide additional resources, again, to your team and provide that value of being that expert in the marketplace. Our underwriting standpoint, we build our underwriting platforms around the business insurance marketplace. We won't go into it, but we have a lot of opportunities around, accelerated underwriting, fluidless underwriting that we can certainly have an offline conversation to. But really where the rubber meets the road is once we sell a plan, what happens next? Because we all know that, once you sell a plan doesn't mean it just goes away forever. It means we have to actually service that plan. So as I mentioned, we record keep over 26,000 business insurance plans inside of our business markets administration area. And that is a service that we offer on a complimentary basis. We do not charge a fee for record keeping in most of these plans, with the exception of our true non-qualified deferred compensation. So bonus plans, buy-sell funding, key person. There's a dedicated executive benefits administrator assigned to each plan. So it's not a general 800 number where it's some first year college graduate, their first year out of college in an entry level job. It is a dedicated executive benefits administrator who understands the plan, who understands the nuances of these kind of solutions. Things that we'll do, everything from list billing to economic benefit reporting on split dollar. If there's any regulatory or legal issues that would change a plan design or impact the plan design, they're on top of that as well. So we really want to make sure that once a plan goes in place with Principal, that we're also there to help you record keep and administer that plan, knowing that's a part of your value proposition long-term with your clients as well.
Fantastic. All right, Paul, I love case studies. Let's dig into a couple. Let's talk about a restoration case. Let's talk about a Bose case, and let's field any questions as we approach 3/4 past the hour. I'm going to let you take it from here. Here's back again to these hospital groups, right? This is a really, really hot industry right now, particularly in the executive benefit and the GI space. So Paul, take this one away.
Yeah, so this was an opportunity. This was the western half of the country where, going back to that consolidation of medical practices, there was a hospital group that had acquired several physicians from a competing hospital. They were doing a benefits review. They actually had a fairly rich group insurance contract that covered, $350,000 of benefit for a lot of these doctors. But you also think about physicians and executives inside of a larger hospital organization. $350,000 is really a drop in the bucket when they're making 7 figures. So what we ended up doing is we positioned like, hey, you've got a shortfall in benefit for these 34 individuals. We have a simplified solution through guaranteed issue, where the physicians can own the policy. It's paid for by the hospital. It's an ancillary benefit. And they opted to go for a 3 times salary above and beyond the 350 with a cap of $750,000. So not a very rich plan. We could have offered, coverage well in excess of 750. That was the amount that the HR and CFO person decided on. But ultimately, what we provided them was a way to bridge a gap for a shortfall of compensation covered through their group life plan. And as a result, we did 34 applications, all done online. There wasn't a paper application that was taken, and there was a revenue generation of about $98,000 of premium for that advisor. So again, the conversation we've talked about filling a gap for highly compensated folks was exactly what started here. And as a direct result was nearly $100,000 of premium on a true guaranteed issue basis.
Nicely done. Nicely done. Case two, existing plan, Paul. How'd you win this one?
Yeah, so this was a scenario where there were a few other carriers who were in the marketplace. Banner Life was one who had a A-list term solution that they recently discontinued, and so there are a lot of businesses out there who may have this Banner A-list term. They may have a plan that is now frozen where they can no longer add participants. So this was actually a call from a benefits firm where they had a utility company in the region that had this plan that was now frozen, and they were trying to add 3 or 4 new participants. So this all initiated as a part of the 401k review. So the benefits producer was doing the 401k review. They said, hey, we've got this Banner thing. We're not sure what to do. We've got 3 people. They're telling us we can't add it in. What else is out there? So we ended up going out and they actually went out and opened up the market. So there are a couple of other carriers in the marketplace. We happen to be a level term product. So the other option was an annual renewable term. So every year that premium increased. So as we were quoting this, the conversation was, gosh, first year premium is a lot lower, but there's a consistency of a 10-year or 20-year level option that the CFO liked the predictability. So we also were able to kind of tell the story around that BMA, the in-house administration, where, rather than use an outside TPA with another carrier, they can utilize Principal's in-house administration. There's a known commodity of cost because it's a level duration. And then this plan was actually about $103,000 of annual revenue coming in based on that individual group as well. So again, all guaranteed issue, term solution based off of a multiplier of salary as well. So very common plan design that we're seeing.
Second case, Paul, 6 figures in premium. Never thought in a million years I could sell some guaranteed issue term for 6 figures of target premium. All right. So talk to us as we shift gears about your Bose department, some of the characteristics of business continuation opportunities and succession cases that you've worked on, and some of the industries again that you've seen come to fruition most commonly.
Yeah, and I think it's really timing wise. Back to the tax filing where business owners are looking at 22 and the impact of valuation. But one of the ways the advisors on the call today can open this conversation is really going back to your business owner clients and having the discussion, asking them the question on, hey, has there been anything really over the past 2 or 3 years that may have impacted the value of your business? Of course, the answer is yes, whether it's, the pandemic, whether it's the quasi recession, whether it's interest rates, the economic environment, inflation, whatever it is, something has impacted the value of their business. One of the things that we do at Principal is we offer complimentary buy-sell agreement reviews, and we offer complimentary informal business valuations. So our attorneys and CPAs will do a review of their document, make sure it checks the best practices. We'll also do things around valuation, so helping them understand what kind of insurance coverage can we offer to help fund their buy-sell. We utilize 5 common valuation methods we'll talk about here in a case study in just a second. But the idea being is that a lot of business owners have been so busy navigating their business really over the past couple of years, odds are they haven't updated their continuation and succession plan. It's a very good opportunity to do that. We're starting to see, a lot of these baby boomers, Gen Xers started to kind of see the thresholds of maybe not retirement, but stepping away from the business. That silver tsunami of business owners trying to transition out is really something that's relevant right now. And the key point of starting that succession plan discussion is around what's the value of the business? What's the continuation plan look like? So those same industries that we've been looking at around, engineering firms, architecture, law firms, CPA firms, family businesses, they are, again, still the same kinds of businesses that are going to be really good targets to have this continuation succession planning discussion with as well.
This fun stuff. I always say, and I get feedback from the agents that we work with that are having success in this space. So it seems to be that if it's a prospect and you're not at a point in the relationship to ask for 3 years tax returns or 3 years financial statements, lead with the buy-sell review.
Agreed.
It's soft. it's complementary. You will find something of imperfection. Either the stated value is several years old, or the book language doesn't match the language of the disability policy, or there's missing signatures, or inevitably something is going to be wrong. And then as you continue to build credibility with this particular prospect per se, you can move into the business valuation and talk, executive benefits and things like that. If they're an existing customer and you're looking to add a value touch point, now's the opportunity to go back and say, hey, businesses have exploded in value. Multiples have gone up significantly over the last several years. I think we should take a look at what an informal valuation looks like. We're going to give you 5 different methodologies. We're going to highlight the one that's most applicable to your industry. And here we go. Now we're in the discussion of business valuation and planning. So we're going to close out this call with a case in detail where a valuation was completed as family-owned business, needed to address some buy, sell, and living buyout strategies. And this gives you a nice picture of, holistically, the value that Principal and Life Brokerage can assist with, and what some really positive things you can do for your clients. So, Paul, you want to take it from here? You were intimately involved in this particular case, so I'm going to turn it back to you.
Yeah, so I think the key thing here is we look at the valuation, the buy-sell review. The low-hanging fruit is, hey, we have a valuation of $10 million. There's 2 owners at 50%. Easy thing to do would say, let's buy $5 million a term and call it a day. Hey, it's a great sale, solves a lot of needs. But where we really come in is thinking bigger picture around a lot of these valuations we do, and try and do actual planning with the client, not just sell an inexpensive term policy to kind of put the Band-Aid on it. So this was a family-owned general contractor business, been around for a long time, happened to be a C corporation because they have been around for a long time. But we had one of the owners who was in his early 70s, who was starting to think about stepping back more and more, has a son who's involved in the business, started to transition shares of the business down to that son. And really the goal here was, how do I address the need for true business continuation planning, but also looking at living buyout strategies? How do we actually get the owner to exit out, get value from the business? And if we jump ahead, we'll kind of go through what our planning process really looked like. So we ran our valuation. Again, we look at 3 years of returns. Again, very successful business. Their valuation just over 14 million. But one of the things that we're going to look at, obviously, is ownership percentages, growth. But that doesn't tell always the whole story. So we got a $14 million business, but as we go through the planning process, we're looking for different things that are best practices based on industry. So what was unique about this particular business, they had modest growth because they've been around forever, but like many construction companies, their book value was huge. They have to keep a lot of cash in the balance sheet for bonding purposes. And as we went through the financials on this case, of their 8.7 million of adjusted book value, 7.3 million was sitting in cash, earning next to nothing at the bank. It's gone up a little bit, but still sitting very idle. So our conversation pivoted from, how can we maybe reposition assets to help fund these liabilities through buy, sell, living buyout structures, versus doing the easy thing, which is put an inexpensive 10-year term to cover the actual need for buy, sell. So our discussion was really around, how can permanent life insurance play a role in this overall continuation plan? And that kind of pivoted us to the next piece, which was, what did we actually implement here? So if we jump ahead one more slide, you'll see.
I was going to make one quick point, Paul. So anyone who's worked in buy, sell and business market knows that it is a royal pain in the what as business values increase to keep adding policies. Right? Business goes from 7 million to 9 million. Well, between year over year, am I going to really do another exam, another application, another policy to administer? Principal is very good here. They get it, right? So they're giving you today's value and the estimated future value, and their underwriting department will work with you hand in hand to ensure for a little bit extra so that you don't have to constantly chase additional policies. That's first and foremost. Second, you can do a lot of things with data. So as you're collecting data to provide this complementary service, you're going to uncover things like $7 million of cash on the books, right? In today's banking world, I don't think you want to sit in a $7 million position with any particular bank. So not only are you looking to expand the yield, diversify the institution that the money sits at, produce some death benefit to fund a buyout, and provide a future income stream down the line to fund, as Paul articulated, a living exit of the business. So, I thought it important to share those few points. So, Paul, what was the idea behind it after you huddled with your team of CPAs and attorneys and product folks, and you completed the valuation and dotted your I's and crossed your T's on the buy sell review? What was the idea, and then what was the execution?
Yeah, I mean, so really it came down to a lot of different needs for this particular business owner. How do we kind of take one bite of the elephant at a time? And obviously the key thing was the buy sell component. So to your point, Anthony, we stacked on some additional coverage to capture that future growth and buy sell. We looked at term for the majority owner. One of the unique things about our term product, as that owner transitions more shares away, as ownership value decreases, we can actually reduce the term insurance correspondingly. So it helps reduce their cost of the plan long term. But then we also wanted to think about that 7.3 million of just dead assets sitting on the balance sheet for bonding purposes and say, could we get a higher yield and also cover the need for buy sell, create a sinking fund for living buyout? So what we ended up positioning was our indexed universal life accumulation product, which has a high early cash value component to it. And that high early cash value component is a first 5 years, 100% return of premium option. So when a business is really concerned around maintaining the balance sheet, this product is a 1-to-1 dollar for dollar asset to liability on the balance sheet. So if we're putting $100,000 a year in premium, we're going to show a booked asset on the balance sheet of $100,000 as well. So it maintains that balance sheet for bonding purposes, all while at the same time providing flexibility long term as that cash continues to grow for the business to either use it for bonding purposes, non-qualified expense, owner buyout, all those different things. And what this slide shows us, again, term can solve a lot of issues. But when we think about term insurance premiums as a general idea, term insurance is a non-deductible expense. So while I'm not going to argue that $100,000 is more than $830 in a term insurance premium, we have to look at what the net cost actually is because of that booked asset. So as we look at how we compare utilizing an overfunded IUL contract relative to a non-deductible term insurance premium, at the end of the day, as this policy continues to grow, we're booking a significant asset on the balance sheet, and we're end up coming out fairly far ahead in the black long-term in this kind of plan. So the bottom line with an idea like this, it's not just going to the easy solution where our team can really be there, and where we're close with Anthony's team as well, is how can we provide unique ideas that position things that are better suited long-term for your clients, not just the let's check a box and sell an inexpensive term product that would be an easy thing to do. So we're trying to be creative as we partner with you and your business owner clients.
Well, again, thank you. We did get some questions in the chat that we've kind of addressed along the way. We're approaching the top of the hour. Paul, I want to thank you for being with us. I want to thank all the participants. I hope this has opened your eyes to some opportunities, particularly showcase some of the resources that Life Brokerage and Principal have to offer you and your customers. Paul, any final thoughts?
The only thing I would add is, I appreciate everyone taking time. If there's individual opportunities, obviously you want to chat. There's a one-on-one conversation about any ideas. Obviously, work with your folks at Life Brokerage. We're happy to set up a call to go, deeper dive on a one-on-one basis. And certainly, here to help every step of the way. So appreciate the opportunity, Anthony, and the whole team at Life Brokerage, and really appreciate the time to share these ideas this morning.
Thanks for being with us. Today's call will be recorded, and we will circulate that along with the slides and a one-page Life Brokerage business fact finder for business planning. So thank you. We appreciate you being with us. Stay safe, and we'll see you next time.
Thank you, everybody.
Bye-bye.